Good morning, traders. This is TonyD from the easyMarkets dealing room in Sydney. I have an update for you today. Those looking for those job numbers on Friday were not disappointed in terms of the beat there. Really strong numbers. Now, this was sort of foretold, and the market did move early because an early Trump tweet said looking forward to these job numbers about half an hour before they actually came out. Now, whether he had the knowledge or not, those numbers were stellar. The most important things to take away: average hourly earnings beat, the headline beat, and the unemployment rate dropped to 3.8. Now, the reaction was immediately some US dollar strength, especially on dollar yen, and against the euro. And the euro actually had a second sell-off, big little stop hunt here. More than anything else, market snapped back afterwards. Now, keeping in mind that the euro was in the middle of a recovery when those numbers came out, as the Italian fears subsided dramatically in the last couple of days of last week. This really it makes it a little bit more complicated, the picture. Really strong US dollar and an oversold euro bouncing back. Generally, you have to ask yourself, where would the euro be if it wasn't for Italy? Well, significantly higher, right? And the market was in a US dollar trend, but we were at 118, 119 before this sort of sell-off, and the snapback still, even with those strong US dollars, would put us lower 118s probably, rather than where we are 116 at the moment. So there is a little bit of room here still if the market wants to go up, and it feels that way, right? It's trying to grind higher on both the euro, pound, Aussie, across the board. US dollars not managing to hold those gains, and with really strong numbers in the market not holding gains, it tells you that perhaps the US dollar story is a little fatigued. Now, it doesn't mean that dollar yen, which is much more closely related to risk on, risk off than some of the majors, won't go higher, but the initial reaction so far in Asia is a little bit US dollar selling. And that's notable because we could have had a much different picture waking up today, as a lot of trade talk over the weekend suggested retaliations coming from the EU, from Canada, and from Mexico. But the market's taken that in stride as well. When those negotiations with China are ongoing and seem not to have come to any conclusion yet, and China did come out with a warning though, saying if tariffs were put on them, they would retaliate, and all the deals and behind closed doors that they're making would be void. So this week's going to be a lot more focused on that trade issues than anything else. But you can see the market's taking it in stride and not reacting negatively just yet. The risk on atmosphere from Friday is still continuing, and just generally recovery in assets globally after the Italian scare is continuing, which is making for the short squeeze potentially continuing as well. Now, keeping an eye on the bigger levels in such a short squeeze. So you're probably talking about the euro towards 118, the pound towards 184, 134.50, and if it was to get above that, then 134.50 to 136 is the next sort of zone. Aussie dollar 76.40 is the top side there. Aussie dollar is of note because we do have a lot of data from Australia, and so the previous support zone becomes the next resistance, 76.40. Now, we've got a lot of data this week. We've got RBA, you've got retail sales in about half an hour, and you've got GDP numbers. Now, most of those are forecast to be half decent, but there is a bit of concern about the GDP numbers. Now, this is because of the capex miss and a few other little indicators that suggest that our GDP may not be as strong as the forecasts. So that's probably going to be the bigger mover. But it is still forecast to still be quite solid, 0.8% quarter on quarter. So the miss there would be of the concern. The RBA is definitely going to be a hold, but it's more to do with the language and how concerned they are with the ongoing trade wars, or just inflation in general. See if they see a pickup in inflation. Any talk about inflation actually would be very bullish, very hawkish for the Aussie. That's been something that a lot of the central bankers have been talking about. There has been a little bit of fear there that the recent rally in oil is going to feed through to higher inflation. You saw that come through from Canada, and you might see that coming through from the RBA. Other than that, though, it could be a non-event, pretty much neutral and staying neutral until they see much stronger recoveries. But you do see there is a huge amount of data coming up this week from Australia, so you can potentially see a break of that 76.40 if it's all solid. But if that was to hold and the squeeze in the US dollar was to finish, then US dollar strength can come from multiple areas. It can come from risk off if the trade wars get more serious. It can come from just yields moving back higher on the 10-year. So look, favouring the US dollar medium term, I think, is still the preferred way here, even if you do acknowledge that the short squeeze is happening at the moment. US dollar has got to where it is, based upon improving fundamentals there, and the jobs numbers on Friday do nothing to stop that sort of sentiment. And there is starting to be a debate now about whether the Fed will raise more aggressively, especially with that wage inflation number, raise more aggressively, not so much this year, but next year. All right, so the amount of rate hikes left in this cycle, the amount of rate hikes that the Fed will do, and whether the Fed will raise rates to stop the economy overheating. Estimates for the GDP now in the US are getting close to 5% year on year. Now that's super strong GDP numbers, and that could really lead to the Fed raising rates next year more aggressively than currently this year. And currently priced in by the market. Market is very hesitant to price in rate hikes above the natural rate, which is sort of the rate that the rate hike cycle should stop at naturally. And you only go above that if you're trying to cool the economy. So whether the Fed needs to raise to do that really will sort of dictate if the US dollar can remain more resilient and longer upside in the cycle than normal. Usually what happens is that you'll note that the US dollar has hit its high. Let's have a look at the dollar index. Back when just before they start raising rates, that's when sort of the high comes in. Then they raise rates, and the rest of the world starts to raise rates. Had this second window of US dollar strength coming now at the moment, because the potential of the rest of the world delaying their rate hikes while the US is raising rates and maybe raising quicker. So that sort of rally here is all to do with that. But very hard to threaten this. Very hard to sort of open this door. The Fed would have to be raising, and more aggressively than it currently is. And the rest of the world also not raising. But you saw that inflation is starting to pick up in Europe, and you saw that reaction last week to the Canadian dollar when they talked about their outlook for inflation as well and raising rates. So there is that pushback from just the business cycles that were overlapping each other, and it is a race against time for the US dollar. The US dollar rally, it only has a window before the rest of the world starts to raise rates, and that is if you keep that in the back of your mind, if you're ever looking to play US dollar longs, if everything's okay in the world, then the rest of the world will be raising rates and the US dollar won't outperform. Alright guys, look, if you have any questions about this and in general this week, how to play it, short term we're looking at that squeeze continue, medium term looking for that US dollar to remain solid enough to push back, range trading at the very least. Give us a call on the contact numbers below. If you do want to have a little bit more assistance fundamentally and technically with your trading, you can sign up with the link below, and a dealer like myself will be assigned to you if you sign up for the VIP package. Thank you.